Let's talk about SoFi, a pretty popular stock in the retail community, but one where either you're hyper bullish or you're hyper bearish on. In this case, we also have some comments from Jim Cramer. Right now, he's not such a big fan of the stock and the company because, well, he didn't like what he saw during Q1. Strange because I didn't really see what was not to like. Again, double beat, guidance, okay. Maybe Q2 guidance was a bit weak, but overall, company is still on track to reach their 2026 goals. More on that in just a second. Right now, it is true that the stock is not really doing so well. It's under every moving average here. The 200, the 50, and the 20-day one sits at $6.43. RSI pretty neutral, but there is not real momentum for the stock. Last week, yes, we had a green candle. Maybe this was a rebound area, $6.3 or so, maybe. But yeah, definitely not a lot of momentum with SoFi stock. It is a stock that is quite sensitive now in the high interest rate environment. Maybe once we get good reports, numbers that might indicate or might push the Fed to cut rates sooner or maybe more aggressively, then yes, stocks like these will definitely go up much faster. But overall, what's the most important? Well, the most important is the business. Is the business doing well? Is it struggling? Yes or no? That's the most important. So let's have a quick recap. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. On the way to reach 50,000 subscribers. So if you want to join the journey, hit that subscribe button. It's free. You can always unsubscribe later. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So a small little recap for those that are not aware. SoFi is a company worth $6.8 billion. Year to date, it's down 35%. Since last year, it's down close to 23%. Overall, since 2020, this total revenue in the last 12 months, revenue has increased 389%. Free cash flow is still negative, but free cash flow with companies like SoFi right now, it's not really the right metric to look at, unlike software companies and other companies. SoFi, just like banks, free cash flow is not always, well, rarely the case. That's the metric that should decide your investment or not. Gross profit has grown quite nicely, 514% since then. Net income, this is only the last 12 months. So of course, if the company continues to be profitable, then you will start seeing green candles when it comes to net income. SBC as a percentage of revenue has come down nicely to now 11.6%. If we look at what the analysts are expecting for the coming fiscal years, including this one, EPS of around 7 cents, sales growth 16.83%, which of course is a deceleration, right? The company has been growing quite fast. Now we've reached a point where, let's say, some parts of the business are not growing as fast as expected, but should reaccelerate the year after that. So right now we're seeing 16.83% sales growth for fiscal year 2024. In 2025, 15.6%, but EPS should be growing close to 200%. And then a reacceleration in 2026, sales growth of 21.1% and EPS growth of 96.17%. So you're basically paying what? 15 times fiscal year 2026 EPS or so. That's not that expensive for a company that is growing that fast. And so if we go back to what Jim Cramer said on June 17, well, he was asked about SoFi Technologies in the mid-June episode of Mad Money, the veteran investor said he'd have to wait on SoFi stock. Quote, "Right now, that last quarter was not great. I just didn't like it and I'm going to have to wait." Which, if I have to humor myself, we could say that this might be a bullish signal. But let's be serious for a second here. If we look at what has happened with SoFi over the last couple of quarters, including last quarter, you cannot tell me that this is not something you like to see. Up and to the right. Members growing 44% year over year. If you look at lending and financial services, that's up 20 and 42% year over year respectively. Products up 38% year over year. Galileo account continues to accelerate now, up 20% year over year. And Galileo, I'll make a separate video about that. Tevis has posted a great interview with the CEO of Galileo. Well, not Tevis and the CEO, but the CEO of Galileo spoke about Galileo. I mean, it's one part of the business, which, by the way, they bought for, I think, $1.2 billion or so. And now SoFi is only worth $6.8 billion. I think Galileo in the future could be worth more than the whole of SoFi today. But that side of the business, now with Technisys, I think it's going to grow quite fast and become a bigger part of SoFi's business. Continuing here, yes, last quarter, quarter over quarter, revenue was down a little bit, but Q4 was really an excellent quarter. Same with quarterly adjusted EBITDA. I mean, it's still growing 25% year over year, so can't really complain. If you look at Q2 guidance, that's where basically the weakness was. So it was a bit weak-ish, only between 14 to 16% year-over-year growth for adjusted net revenue and adjusted EBITDA margin 21 to 22%. If we look at full year 2024 guidance, still expecting about the same as before. The guidance assumes expenses under the EBITDA line to remain flat when compared to 2023 results. A 50-50 revenue split between lending and the combined tech platform and financial services segment, as well as adjusted EBITDA margin of 25% for full year 2025. If you want more information, of course, I talked about SoFi in the past, so some of the videos will be available in the top right corner. But if you need more information right now, this was basically, I think, 2 quarters ago during the earnings call. So they talk about guidance, long mid-term guidance, should I say. So the 20% to 25% compound annual revenue growth from 2023 through 2026 assumes a compound analytic growth rate of 50% for financial services revenue, mid-20% for tech platform revenue, and mid-teens for the lending segment revenue. The earnings power associated with this growth is notable and could drive between 55 to 80 cents per share in GAAP EPS in 2026. So now you're paying even less than 10 times the high end of that GAAP EPS guidance for 2026. Moreover, we see 20 to 25% EPS growth beyond 2026, reflecting both the continued growth of the core businesses we've just described, plus the added benefit from new business lines launched in 2024 through 2026 time period that begin to scale and impact beyond 2026. So again, I know a lot of investors are asking questions about why the stock is this, why the stock is that, what has happened, what this and that. Look, as long as they don't change their mid-term revenue guidance expectations, 2026 and beyond, or between 23 and 26, then nothing has changed. You get a cheaper stock, but the guidance is the same. So, I mean, I can't complain. Of course, it would be great if the stock goes up, if we go back up to 10, if we go to 15, and maybe eventually to 20 and even more than that. Yes, of course, that would be great. But right now, I have no intentions to sell my shares. So as long as I can keep on accumulating shares of this company, as long as the business continues to execute, as long as this guidance is still the same, I mean, why should I complain? I would also like to remind you that 1, SoFi bought Galileo for $1.2 billion, and 2, they acquired Technisys for, I mean, that was valued back then apparently for $956.8 million. So both companies worth a little bit over $2 billion, which is more than a third of SoFi's, maybe just a third of SoFi's market cap right now. And back then, it was said that the estimated incremental revenue from the acquisition of the cloud-native digital multi-product core banking platform is expected to add a cumulative $500 million to $800 million to SoFi through end 2025. That's quite a lot, especially if you know how much SoFi is generating right now. Then a small, let's say, summary of Galileo and Technisys and what they offer. So Galileo provides a financial technology platform for fintech companies and other brands. This platform allows them to create features like issuing debit cards, processing transactions, and other functionalities needed for financial services without needing to build everything from scratch. They essentially provide the building blocks for these companies to offer financial products. Technisys offered a core banking system. This system is the behind-the-scenes software that banks use to manage accounts, track balances, and process transactions. Now, both of them together, combined, they offer a complete end-to-end solution for financial institutions. This means a company can use their platform to build and manage all aspects of their financial products and services. And yes, this is not just for neobanks, this is also for legacy banks that basically want to be a bank of tomorrow and not the bank of the past. And so yes, while right now it is painful to watch the market go up, this company go up, this stock go up, and you look at SoFi, it goes down, it goes sideways, doesn't do much. Yes, the CEO has been buying more shares, but right now clearly that does not really move the stock, and to be honest, shouldn't really do much either. We're nearing the next earnings season. That's more important. I want to see the business continue to perform, seeing if guidance is still the same or maybe they're raising that guidance now again. Remains to be seen, just like in the last 2 years. Triple beats, raised guidance, that has been fine. Stock goes up on the earnings day, but then down the next couple of days. Let's see what happens. Of course, it is painful. I'm not gonna lie. I mean, you don't like to see your position in the red, but that doesn't mean that suddenly, just because the stock hasn't done much, that suddenly the business has completely deteriorated. No, I've not seen a sign of this business being a bad business. As I said in the past video, SoFi is a bad stock, not a bad business. So that's about it for this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.